All right, I got just a couple things to go over that I want to go over here before we get going. One of which, again, is something that's kind of come up in the news, and I think it's kind of worth talking about because it has to do with some of the stuff that we're going to be doing, and that is, anybody familiar with the company Peloton? Yes, you're not familiar with that? Man, oh man. You guys don't, of course, nobody watches TV anymore except us old people.
So what is it?
Peloton's a fitness company, and primarily they started with making fitness bikes. Okay, what are you guys laughing at now?
Never mind.
Oh. They started to move into also treadmills and whatnot, which sounds that's old hardware, no big deal, right? But what their main thing is that they're trying to make a lot of money at is to sell subscriptions. If you watch the ads, you get this bike and it's got a TV screen on there, it's hooked into the internet, and you get live fitness coaching, that type of a thing. You know, it shows the young lady on the bike just going hell-bent for leather, and it shows the screen, and there's an instructor yelling at her saying, hey, keep it up, do a good job, that kind of stuff. It's kind of interesting, right? And it's been around for a few years now. It's done pretty well. It's currently a privately owned company, right? Meaning that it's not available to the public. You and I can't buy stock in it, but Peloton plans to raise as much as $1.3 billion in an IPO that would double its valuation to $8 billion. Okay, and so there's a lot of kind of interesting things in the article. I thought, I mean, if it's worth $8 billion, how come they're only raising $1.3 billion? Well, if you come down, you figure out that one, the founder, even after all this is done, he's going to own, the heck is his share? I thought it was 15.9 or something like that. Based on his 15, he'll have 6% voting power. Okay, that's different than his overall ownership in the company, but he'll have 6% voting power. We'll talk a little bit about that. Okay, existing Peloton investors, Tiger Global Management, is going to control 19.6% of the voting power after the IPO, while True Ventures will have 11.9% of the voting power. So those companies, they're called venture capitalists often. You might hear that term. They've already invested in Peloton. They've written some big checks. These are people that oftentimes have a lot of money and they throw it into these venture partnerships or venture corporations, whatever the case may be, and they write some big checks to some of these upstart companies that are starting to get rolling, right? And they own pretty good sized chunks of that. So why if a company's worth $8 billion, are they only raising $1.3 billion? Because some of these existing companies already have that other $6.7 billion roughly, right? And the founder, this just lists the founder and a couple of them, right? But there are probably a lot of other venture capitalists that have invested in this company, okay? So if it goes public, you and I would be able to purchase stock in it up to $1.3 billion. That just depends on when that stock hits the market. People are going to bid to purchase that. Either everything's going to be rosy and wonderful, and they're all thinking it's good, and sometimes you'll see that stock price just pop on the opening when it becomes IPO. Sometimes you'll see it go the other way. Most of the times they seem to kind of pop. Okay, on the opening day, usually a day or two later, they fall back down, and then they kind of work their way back up. It kind of depends, but so that's coming around. Is that going to happen this semester? It's possible. Peloton might get their IPO done this semester where they would raise that money. Why do they need to raise money? Well, part of it is they're losing money. They haven't made money yet. Okay, kind of like Uber. Uber hasn't made money yet either, but it's valued at like $50 billion. Okay, isn't that amazing? How do you not make any money and you still have a value of like $50 billion? Well, it's because, or maybe Uber did go public. Did Uber go public? I think they might have, but they still haven't made any money. In any event, it's a lot of times that's based on subscriber growth, those types of things. At some point in time, right now Peloton's probably spending a lot of money. I see a lot of their advertisements. You guys might not. I'll bet you if you Googled it, you'd find all kinds of stuff on there. But they're spending a lot of money acquiring new subscribers, right? They want to build that subscriber base so they have that steady income. Then they can start leveling off the expenses. Hopefully the subscriber base keeps kind of growing, and pretty soon it's going to turn profitable and everything's going to be hunky-dory and wonderful, right? Okay. investment, these are what I call speculative investments. You know, if I was to put much money in this, it wouldn't be much at all. Okay, I'm not much of a speculator, but you know, on the other hand, geez, it means I missed Facebook. It means I missed Amazon. It means I missed a lot of ones that probably could have made me, you know, a lot of money. So, voting power versus, okay, they got Class B. The stocks that are being issued are Class A. If you read up here, this is kind of interesting. The Class B shares that he owns and that these companies own will get, when it comes to voting time, they'll get 20 votes for every share of stock that they own. The new stock that's going to go on the market would only receive 1 vote for every share of stock. Okay, that's a technique that sometimes founders use to maintain control and yet have an IPO, and so they raise some money. Okay, is that okay? Well, there's a lot of that happens. You know, Under Armour's one. They've done that. Kevin Plank's kind of done that to kind of retain control of that. And yet there's some Class, I think, C shares out there that don't have voting rights at all. Okay, so sometimes they'll do that where you don't have any voting rights whatsoever. Kind of interesting. You know, people still buy it because those companies, doesn't mean they can't do well. They sure can. And sometimes giving that founder that kind of power is actually a good thing. You know, actually can be a good thing. So, okay, you know, talks about his pay, some other things. The valuation. Again, the valuations are, you know, based on what people think it's worth. Okay, there's a good lesson in life. Okay, and Carl would know this from the auction company, right? Something is worth exactly what somebody's willing to pay for it. Okay, not 1 penny more. Okay, it's never worth a penny more than what somebody's willing to pay for it. As a banker, you learn that people come in and they want to give you something for collateral. Well, God, that's worth $1 million. Well, you know, I think Joe down the street would maybe give you a couple $100,000 for it, so it's worth a couple $100,000, right? You know, it doesn't matter what that person thinks it's worth. It's what it's worth in the marketplace. That's what really matters. So, yeah, Peloton has posted a net loss every year since its founding in 2012. So for 7 straight years, but it's only $539 million in cumulative. So in the 7 years, it's only lost $539 million. Yeah. The company that they're comparing it to a little bit is a company called WeWork that they think is going to go public too. I think that's a customer relationship management company, maybe like a Salesforce or something. They lost over $2 billion just last year, and they're talking about going public, right? Okay. I get back to, you know, it wasn't until just a few years ago that Amazon started showing a profit. Amazon was public, and they went for a lot of years as a public company and never showed a profit, and yet its stock just went boom, just kept going up. For you guys, it just kept going up and up and up. Okay, still going up and up and up, right? So companies can lose money if investors really feel that the investments are going back into the company to grow it, make it profitable eventually, et cetera, et cetera. So Facebook was like that too. Facebook went for a lot of years. But everybody knew, and Amazon's the same way, that they can almost flip a switch. You know, Amazon could say tomorrow that we're going to quit investing quite so much money back into the company, and it'd be like flipping a switch, and all of a sudden they'd show lots of profit. Okay, so, but they're still interested in growing the company as opposed to just showing a big profit at this point in time. Okay, has anybody come up with another company that they think they might want to do their analysis on for Project 2? You got till Friday. Any ideas? Just got 2. Okay, you got till Friday. Today'd be a good day to ask questions if you have any. That said, then, and I'm not going to record this, but if you got till Friday also to be thinking about the small company that you want to use to start and to do the Project 1, right? So again, today would be a good day to ask any questions about that. If you got questions, other people do too, so don't be afraid to throw your hand up or holler at me or do whatever and say, what about, X, Y, Z or something. So no questions? Everybody knows exactly what they're going to do? You guys are confident? All right. I'm going to sign off then, and I'll come around and see how you're doing on Chapter 4 assignment and these two assignments that you have for Friday as well.